This is going to be lesson number 3, and it's titled Taking a Different Path in Bitcoin. And so this was kind of inspired by somebody yesterday on the YouTube channel. Some comments. I got into a little debate, not really a debate, because the guy was just kind of talking nonsense. And this happens quite often on the channel. There's always some, we call them 0-hour dipshits, but I don't know if that was necessarily the case yesterday on the comments. But he was kind of, saying a few things that didn't really make sense to me about Bitcoin. I wouldn't say it was like your average person's response to a lot of Bitcoin stuff. You could tell that he had been in Bitcoin for a little bit. But he left one comment and he said something along the lines of, if you held on past $100 or something like that, it's never going to be a good bet after that, something like that. But the point of it was that I've kind of got the impression that this person had basically got into Bitcoin very early. And then maybe he watched his Bitcoin portfolio or Bitcoin holdings go from $2,000 to $4,000. And most people there, that's when most people would cash out. They'd say, hey, I got 100% profit on my investment. I'm going to cash out. And so I feel like that would have been a long time ago now. And I'm guessing he spent every single day since then regretting that decision. And that's kind of what a lot of people have done and probably will do in the future. So that's kind of what we're going to be talking about today. There's a saying in Bitcoin that says everyone gets Bitcoin at the price they deserve. And I don't think that that's necessarily the case. I think it's something more along the lines of everyone gets Bitcoin at the price they understand it. Because this guy actually got Bitcoin when it was $50. But now he's in the YouTube comments telling me that I'm wrong about Bitcoin because he happened to take his profits very early on, probably full of regret. And now he has to spend all this time, all this energy, not only feeling bad about himself and full of regret, but trying to somehow make things right by leaving comments in YouTube videos about Bitcoin. So it is. I think that one of the themes throughout the 88 lessons here that we're going to get into is having a good understanding of Bitcoin. Because my opinion here, my thesis on this whole thing is that there's millions of people in the world that currently own Bitcoin. But the people who don't understand what they're holding, they're basically just placeholders. That Bitcoin's going to be with them for a little while, and then it's going to be moved to somebody else. And then maybe if that person doesn't have an understanding of Bitcoin, it's going to move to somebody else. But once people have that understanding or the green light comes on in their mind, that's going to be a future episode, the green light theory that I have. But once that green light comes on and once they actually start to understand Bitcoin, that's when everything changes. That's when that Bitcoin is actually taken off the market. And as we know about Bitcoin, there are only so many Bitcoin available. There's only so many sats available. And so when somebody has their green light turn on and they have that understanding and conviction, the knowledge of Bitcoin, those coins aren't going to move, which means when you're looking at the supply and demand dynamics of Bitcoin, that's a pretty big part of the equation is the available supply. So everybody knows that there's 21 million. I think that if you took a poll of people on the planet, I don't even think it's that much. But what I'll say is there's a lot of people who know that there's 21 million, but don't really understand what that really means. They just kind of see it as a number. Because again, it's one of those things. Bitcoin is a complete paradigm shift. We've never had an asset before in human history with an absolute scarce supply. So that's the first part, absolute scarce supply. But the other thing too is that that's just a number. That doesn't really mean much. That's how many Bitcoin will ever be, in circulation. But there's a lot of those coins that have been lost. And there's a lot of those coins that as the green light comes on in people's mind and they get those sats and they protect those sats and they put them into their cold storage self-custody Bitcoin wallet, those sats are no longer available. So those are taken from the denominator, the total amount of Bitcoin available, the supply of Bitcoin. And there's a difference between the supply, like the 21 million Bitcoin, and the actual available amount of Bitcoin. And as that number of available Bitcoin goes down, obviously, if the price or the demand continues to go up, which we're going to talk about kind of in the second part of the show today with the recent announcement and update from square, demand keeps going up. More and more people every single day are getting into Bitcoin. More and more people every single day are starting to understand Bitcoin. More and more businesses, more and more investment funds, more and more BlackRocks of the world, more and more countries and cities and towns and municipalities, states. Every single day, there's more people getting into Bitcoin, which is driving up the demand. So that's a pretty important part of the demand for it. And unless you know something that I don't see that demand going the other way in the near future or anytime for that matter. I think that number is very small right now. Again, the people who actually understand Bitcoin is very small. I don't even know what my prediction would be. I would guess less than 100,000 people on this planet actually understand Bitcoin. And so that's kind of why I'm saying everyone gets Bitcoin at the price they understand it. Because even if they buy it, but they don't understand it, those coins are going to flow somewhere else. Whether the price runs up and they cash out at a 100% gain, or it's crashing down and they don't really know what's going on, so they sell it. That's probably the most typical path, which we're going to talk about here in a second. But just to kind of review what we talked about last lesson, we talked about all these things that happened in history. These are kind of like the main monetary events that have happened in the last century. So this is probably the biggest one here, the creation of the Federal Reserve. Between here and here, between 1913 and 1944, we had two world wars. Two world wars right after the creation of the Federal Reserve Bank. I wonder if there's a coincidence here. I don't know. Could be, maybe not. We're going to talk about that a little bit here. But this is the big one. It's in bold. This is in 1971, where basically all of society, every metric in society started to trend downwards ever since 1971. Our food, the products we use, the materials we build with, the relationships we have, everything has gone down in quality since 1971. And it is absolutely no coincidence. And that's when we went off the gold standard. And all of a sudden, our money became an illusion. Our money became backed by nothing. Our money became something that could be printed without actually any energy. And that's one of the things throughout these 88 lessons that you're going to notice is that's probably the biggest difference between Bitcoin and fiat, is that fiat takes zero energy. The whole world here is just a bunch of energy. That's all it is. And a small group of people have the ability to create money without actually any energy going into that. That's a problem. It's a big, big problem. And so that's why we've seen the prices of everything explode. That's why we've seen the hospital visits explode, the divorce rate explode, the jails filling up. Everything's happened since 1971. So it's a pretty big deal. And that's kind of what we're trying to turn around here now. So if we think about this, if we think about 1913, the creation of the Federal Reserve, if we think about these two wars here, World War I, World War II, that were fought, started right after the creation of the Federal Reserve, you can kind of start to understand what's wrong with the world. And if we think about the Remembrance Day here, that's one thing I wanted to touch on here, Remembrance Day. I think it happens when you load that Excel app. Okay, let's try that again then and see what happens, because that's where we're going next year anyways. Okay. So we're going to be talking about the typical paths in Bitcoin here. And I'm getting word from the chat that our sound is kind of crappy. So we're going to have to push through it. We're going to push through it here. But let me know if you can still hear me with... Okay, sounds like we're good. Good. Thanks, everybody. Okay, so what I'm going to be talking about here is the typical paths in Bitcoin. And I think that this is something probably the most people watching here would be fairly newer to Bitcoin, maybe. Actually, that's a good kind of test just to kind of read the room here for today and going forward. I probably won't adjust much, but I just kind of want to get a good feel for everybody who's showing up for these weekly shows, kind of what stage you're at. What year did you get into Bitcoin? Was it 2024 after the president changed in the US? Was it 2020 during the great pandemic? or was it before that? Because we're going to be talking about the most popular path in Bitcoin that people take, the most regretful path that people take, and the most effective path that people take, which is going to tie into the biggest lie in Bitcoin. And I think it's important to just kind of understand this right now, because once people start getting into Bitcoin, once people start getting into Bitcoin, it's a very hard rabbit hole to get out of. It just seems like every person I talk to, the moment they get into Bitcoin, it's just like nonstop. And so if you are somebody who's kind of in that realm right now, I think this is going to be a very good video for you, because I've seen this so many times in my years in Bitcoin of these different paths and how they've all worked out. So here we go. This is these are the paths that most people take in Bitcoin. And so when I say taking a different path, we want to do something other than this one, the most popular. This is how a lot of people get into it. Path 1, most popular. So let's start with that one. So you can see here that all three of these paths start the same way. And I know that there would be exceptions with this, but I feel like they're few and far between, where somebody gets into Bitcoin for something other than the price going up. So everybody kind of starts on the same foot. And so path 1, we're going to focus on this one for now, which is you buy some Bitcoin. You see the number going up. You want to be part of it. You want to get in on the action. So you buy a little bit of Bitcoin. And then the price starts going up or down. Usually down. It's usually when people see the price going down, that's when they panic, because they don't understand it. They have no idea what's going on here. They don't have the knowledge, the conviction, the understanding of Bitcoin. And so they panic and they sell it. And then at some point, kind of like the guy in the YouTube comments, maybe in the future, they start buying again. And maybe the price when they got into Bitcoin, the exchange rate of Bitcoin was $50,000. And when they finally get past their ego, once they finally start taking some time to figure out what this asset is, because at this point here, when everybody gets in, nobody has any clue what the hell is going on in Bitcoin. Nobody does. So if they can get past that, if they can actually get over the fact that they bought, panicked, and sold, then they can start buying again. But the problem is most people, especially guys like the YouTube comment guy, they'll wait 5 or 10 years before they start buying again. So when they first got in, maybe the price of Bitcoin was 50,000. And then when they started buying again, maybe it's 500,000. Or something that's already happened, maybe people were buying at 1,000 and now it's 100,000. That's something that has happened in the last 10 years. And so they start buying again. But the problem is they end up with fractions. And so this is the most popular path. This is what we want to avoid. And I would say that the main way to avoid this is to actually, once you have a little bit of Bitcoin, once you have a little bit of skin in the game, you should be taking time out of every single day and watching a podcast, reading a book, reading pages from a book, reading an article, paying attention to the right people. And this is actually one of the huge value ads that you should be looking for, is trusted people in Bitcoin. Trusted people in Bitcoin. And within the visionaries, within the Maple Bitcoin School, we have resources that we trust. So people, you don't have to trust us. The whole thing in Bitcoin is you shouldn't trust anybody. You should verify everything yourself. But I do think if you get off to the right foot and you're listening to the right people, that can be the difference between you actually panicking or you actually hodling. It's who you're listening to. It's who you surround yourself with, who you're talking to about this stuff. And the people who are kind of trying to do it on their own and they get off on the wrong path, they start watching some crypto channels. They start taking on leverage. They listen to one success story out of a million and they start taking on leverage. They don't understand what they're holding. They're just looking for that quick gain. And they want to turn their $1,000 into $50,000 because they're desperate. So this is kind of a very short-term lens. That's where kind of everybody starts. But if you're not paying attention to the right people, if you're not talking to the right people, and if you're not tuned into the proper frequency in Bitcoin, you can go down a very bad path. which usually leads to panic, selling, and then buying again 10 years later. So it's unfortunate, but that's kind of what we're trying to prevent with these lessons and with these shows every day. So this is path number 2. And this one, I would say, is a much better path, but it's still not ideal. I feel like this is where most people, once they get past that first little crash without panicking, this is kind of where a lot of people end up. So again, they end up getting into Bitcoin because they see the price going up. Gets everybody interested. It's a pretty good marketing technique by Bitcoin, by Satoshi. So they start off with a small allocation. Let's say that they put 1 or 2% of their portfolio into Bitcoin. And again, they've gotten over the hump of the panic. They've maybe watched it drop 10%. That's just what Bitcoin does because it's a very new asset. Nobody really understands it. And so there's a ton of volatility for now. And so they put 1 or 2% because they don't want to, their financial advisor told them to only put in the money that they are comfortable losing. So they put 1 or 2% in. But they have the foundation. They've been listening to the right people. They've been tuned into the right frequencies there. And so they start getting a little bit more interested in Bitcoin. And all of a sudden they're watching 2 or 3 hours of podcasts every day. They're listening to audiobooks. They're reading books. They're going to Bitcoin meetups. They're more interested. And maybe months pass, maybe years pass, but they decide, hey, this thing's legitimate. They put in the time to understand what it is or think that they do. And they make a bigger allocation. So what they started with 1 or 2% now is maybe 20%. Because once you get to a certain point in Bitcoin, you kind of realize that everything else is fake. I would say outside of like gold and land, every other asset class is pretty much fake. So you figure that out and you're like, okay, well, why do I have 50% of my portfolio or 60% of my portfolio in the stock market when every single company in the stock market is 30 times overvalued? I'm going to start moving capital over from my portfolio. Or they have a big portfolio of real estate. And they're like, real estate's a pain in the ass. It's a headache. I have to deal with tenants. I have to deal with increased prices. I have to deal with the mayor in the town. I have to replace my roof in 5 years. All this stuff. They're like, oh, I'm going to sell a couple of rental houses, buy Bitcoin with that. And they start making these bigger allocations. But the problem with this strategy is they have more, but it's still fractions of what they would have had here. So they might have got 1 or 2% at, let's say, $50,000. And then they decided to allocate 25%. They sold 5 real estate properties and bought Bitcoin. But the problem is the way that Bitcoin works, and if you looked at the performance of Bitcoin for the last decade, they end up with way less Bitcoin. Way less Bitcoin. And I know that it's not an easy thing to do here. And that's the most effective, is the most difficult path, but it has turned out historically to be the most effective path in Bitcoin, which is, again, you see the number going up, except the difference here is that instead of putting 1 or 2% into it right away, or even less, some people start with they might have multi-millions and they put 10,000 in. Sweet. The difference here is that this group put a big allocation in. Maybe they put 10% in. Or maybe they started with 5 and a couple months later, 10, and then a couple months later, 20. But they put a big allocation in. And so when you have that much invested, obviously you want to kind of keep up with your understanding, your knowledge. You have a lot more skin in the game. And so your understanding also ramps up at this point too. You're spending more time in here. You're putting in more effort, more proof of work going into your Bitcoin stack. And so what do? You keep buying. And so you don't have fractions now. You have the maximum amount that you could have possibly got out of Bitcoin. And of course, leads to sovereignty. Because once you're at that point and you know that you did pretty much everything that you could do, not only are you decently allocated to Bitcoin, might be 50%, might be 75%, might be over 100%, like some of us in the chat here, But then you just keep stacking. And you start to understand some of the most important properties about Bitcoin, which is the fixed supply, the decentralization, the fact that nobody has the ability to change it. Nobody has the ability to print more Bitcoin and essentially devalue your wealth. You start to notice that your local business is now accepting Bitcoin. So the demand is going up. There's more people accepting Bitcoin. There's more people storing Bitcoin for the long term and reducing the total amount of available supply of Bitcoin. And you start to notice all these different things. The videos you watch has a QR code on it. You can actually send money to somebody else that's on a different part of the planet without a bank involved, without paying a bunch of fees. You realize that, hey, I have family overseas that I've been paying 40% to transfer money over to, that I don't have to do that anymore. This is a huge value add for me. This is a huge use case for Bitcoin. And if we go back to the use cases here, that's what essentially Bitcoin is. You can use it for an emergency fund because emergencies you're kind of looking long-term. And if you're storing your emergency funds in fiat, every second of every day, the value of that emergency fund is actually going down. Whereas if you store it in Bitcoin, it's the opposite of that. You could be using it to save for a house. You could be using it to send cross-border payments, accept Bitcoin, start a business that doesn't have a physical store, but you're doing work for people all around the world. And without having to convert currencies and get your bank's permission and get their bank information and go through all this BS, worry about taxes, you can just accept Bitcoin. Everybody's on the same standard. You can delay your gratification. You can set up insurance funds for your health, your dental, your life insurance, your pets, everything. Because it's long-term, and Bitcoin is made for people who think long-term. No transaction fees. Big part of what we're going to talk about in this next part here with Square. Additional security on debt. So you could actually use Bitcoin to securitize your house. And probably in 5 or 10 years, the Bitcoin is going to be worth more than your house. Opens up a worldwide economy and actually allows for micropayments, which the fiat system, the fiat rails cannot handle. Try sending 20 cents to somebody in fiat online. Try making a payment for 40 cents. It's impossible because there's too many hands there. There's too many leeches involved in the equation. There's too many middlemen in the equation. And remember, the whole point of Bitcoin is, number one, separate money from state, take away their ability to print money, to fund wars, to devalue your life. That's number one, separate money from state. But number two is it's a peer-to-peer electronic cash, which means peer-to-peer, there's no middleman. An electronic cash, which means it has the exact same properties as cash, except you can do it with anybody on the planet. It's a pretty big deal. So the biggest lie in Bitcoin, this is kind of what I wanted to get to here, because in this path here, the most effective path, it goes against what a lot of Bitcoiners will tell you on YouTube. Because if you watch Bitcoin YouTube channels, everybody says the same thing. Not your keys, not your coins. And trust me, I spend half my days, half my life talking about Bitcoin security. I help people almost every day set up a hardware device for the first time. My business partner lives in Sweden. We help people secure their Bitcoin for the next 100 years for their family. I subscribe to that theory more than anybody else. But the problem is that when you first get into Bitcoin, you want to make a big allocation. Most people aren't ready for that yet. And I think the majority of Bitcoin that's actually been lost in history has been because people move too quickly. So what I'm saying is the best, most effective strategy here is allocating a bunch right off the top. 10, 15, 20, 25, 30% of your portfolio right off the hop. I know it sounds crazy, but that's the most effective way historically, and probably will be the exact same in the future. But the problem is you now have a big allocation to Bitcoin, but you have zero understanding of how to secure it. Zero. So long-term, what you want to do is you want to learn. You want to take some time. You want to watch videos. You want to read. You want to see what other people are doing. You want to have conversations with other people, other Bitcoiners, learn from them over time. But that doesn't happen overnight. You want to make your allocation overnight, but you can't catch up in your knowledge gap that quickly. And so the biggest lie in Bitcoin is that everybody has to take self-custody of their Bitcoin. And it's just not true. So what I suggest instead, so here's the biggest lie here. The biggest lie that you're going to hear in Bitcoin. Oh, what happened there? Tough go here. Biggest lie in Bitcoin, not your keys, not your coins. If you can't self-custody your Bitcoin, you suck. You should stay out of here. This is for serious people only. That's the biggest lie told in Bitcoin. So what you can do instead, you have a couple different options. Number one, you can buy an ETF, which I don't like the idea of myself. I don't want to give Wall Street or the fiat system any more ammunition, any more of my capital, any more of my time. But for some people, that might actually make sense. So if you are looking to allocate to an ETF, I would shy away from BlackRock personally. There's a lot of good ones out there. Fidelity would probably be at the top of my list. But number two is you can just buy Bitcoin and leave it on the exchange. Not that hard. And if you're in Canada, the best way to do that would be something like ShakePay. If you're in the USA, I would say your best options are going to be River or Strike, where you can actually just send them dollars and get allocation to Bitcoin, get exposure to Bitcoin, and they're going to hold it for you. Other places, there's a good custodian called what's their name now? They're in Australia. Caleb Brown. So these exchanges will let you buy Bitcoin, and they'll actually hold the Bitcoin for you. And the cool thing is they don't charge you anything for it. Obviously, there's a huge risk. No, I wouldn't say huge, but there is a risk involved with keeping your Bitcoin on the exchange. And even though I disagree with this for everybody, this is definitely the case. Until you actually remove that Bitcoin from the exchange, it's not really Bitcoin. You just have the price exposure to Bitcoin with some added risk. But I would still much rather go that route, making a big allocation and having to trust somebody else for 6 months or so, 3 to 6 months, than tiptoeing in and making a small allocation, realizing that, hey, this is the only asset, one of the only assets that's real. It's going to be the best performing asset for the next 1,000 years, probably. I should probably put more of my portfolio into it. But the problem with that strategy is by the time you catch up to that, by the time your knowledge catches up to your intentions, you missed out on a huge amount of sats. So that's why you end up with the fractions. That's why this is the most optimal, because you make a big allocation, you let somebody else hold on to it for a little while you get your bearings together. You increase your understanding. You take the time to study, to learn, to set up your security. You keep stacking. And then eventually you take full sovereignty. You take self-custody of your coins, and you don't have to worry about any of this stuff. But you get the maximum amount of Bitcoin. And that's why this is the most effective strategy, for that reason. You get the maximum amount of Bitcoin. And then from there, of course, you keep stacking. Maybe you take a loan out against a portion of your stack, buy more Bitcoin. It's like real estate. It really is. And you're going to see that strategy increase through time here, where people, instead of buying real estate and letting the equity go up and refinancing it and buy more real estate, people are going to do a much quicker, easier, and in a better form of collateral with Bitcoin. It just hasn't started yet, but it will. And so that's why this path 3 is most effective, because we're still in the very, 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 very early stages of Bitcoin. And so the earlier you can allocate, the better off you're going to be, the maximum amount of Bitcoin you're going to get. So I'm going to have links to all these. I don't know if I have one for Strike or Caleb Brown, but I'll put some links in the show notes for people. If you're someone new to Bitcoin, they'll be in the pinned comments if you're watching this later at some point. But that's the different path. So again, this is kind of like the most popular path. This is where most people go. Once they get past that, this is the second most popular path, the most beaten path. And this is the least beaten path. This is where hardly anybody goes. But it's, if you can do it, this is what you're maximizing here. Your sovereignty over time and your maximum amount of sats. Because everybody ends up at the same place where they realize that that Bitcoin's the only asset that really matters. You know, there's some gold bugs out there who like Bitcoin. There's some real estate investors that like Bitcoin, but eventually they're going to be more Bitcoin than the other assets. They just haven't got there yet. But that's where everybody gets to. So why beat around the bush? Why take more time than you need? Why tiptoe? I was going to say a different word, but why tiptoe into it? Just make a big allocation right off the hop. Once you see what's going on here, you can trust other people for 3 or 6 months. During that time, you're paying attention to your education and your security. You get that all set up. And then when the time comes, you can actually move your Bitcoin from ShakePay, from River, from Caleb and Brown, and maximize your sovereignty and maximize your total sats. So that's been lesson number 3. Sorry for the technical difficulties there. It sounds like we made it through it. I don't see any bad comments in there. But keep in mind, all these lessons are going to be available on YouTube. I created a brand new playlist for the 88 lessons. We do this every Tuesday at 2 p.m. Eastern time on the YouTube channel, Rumble channel, and Nostr. And if you want, one thing I'd say is, you know, if you're just kind of brand new to Bitcoin, the best way to avoid this path here is to, first of all, be aware that it's the bad path. But number 2, realize that communities like this, visionaries, whether it's visionaries or Maple Bitcoin or any other community that you've found trust in, that's where you want to be hanging out. You want to be talking to Bitcoiners who have been around for years or cycles or whatever it is. You would not believe how much of a positive impact that's going to have on your Bitcoin journey. So that's Visionaries. I'll also put a link if you want to join that community as well in the pinned comments. And that's it. That's lesson 3.